Today is Monday, July 22nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Alan, let's start this morning with the stock indexes. What is the outlook for U.S. stock index futures?
Well, it still appears to be higher, and rather ironically, the U.S.-China trade situation has taken somewhat of a back seat, and now traders are apparently looking more at the interest rate influence, which remains very supportive to stock index futures. So we've got the Fed meeting coming up, we've got the ECB meeting this Thursday, lower rates are in store, so traders focusing on lower rates, and that seems to be sustaining this bull market in stock index futures.
Last week, gold futures advanced to the highest level in over 6 years.
Right.
Why, and can this trend continue?
Well, once again, it's low interest rates. Of course, now we have some flight to quality with the tensions rising in the Mideast. It seems that there is very little inflation now, so traders seem to be looking at something else down the road, probably inflation that will be produced by lower interest rates. But in any event, the technicals look very suggestive of higher prices and very accommodating. So I think the trend is still higher for the gold, and this is a trend I think that will last for quite some time, well into this year, probably even into next year.
I'd ask both of you this question. With the tensions rising in the Middle East, are the energy markets going to be affected by that as well?
Well, what do you think?
Oh, definitely. I think that the seizure of the British tanker escalates it to a higher point, and we just don't know what the next step is going to be by either countries, but it's at a higher level, so you have to have some kind of premium in the crude oil market on this tension.
So certainly something to watch as things move forward in the Middle East.
It adds to the volatility, because if they sit down and decide to come up with some type of peace agreement, then the crude oil market, it's overpriced because of too much supply, and worry about slower economy and maybe slower demand. But if somebody decides to take another step further and escalate the conflict, then crude oil is probably too low.
So I think Steve is exactly right. There's major offsetting influences, the tensions in the Mideast, but a slowing global economy causing weaker demand. So I think we're caught between those two extremes in the crude oil.
One final question for you, Alan. What is the outlook for the interest rate futures markets right now? Still another ease to come?
I think higher, but first of all, there was a triple bottom that the bonds fell through. Since then, though, we have advanced to above that sell signal. So the fact that there is a false breakout to the downside and a move back up to higher indicates higher prices. Of course, we do have the Fed likely to cut rates at the end of this month, possibly another one later this year. Other central banks likely to be easing credit. So I believe we have to continue trading from the long side. There's a lot left to the upside in the interest rate futures markets, especially the 30-year bonds.
Steve, talking about the grain markets now, really hot across the Midwest, also a lot of rain. What's the latest on the U.S. 2019 crop conditions and crop size?
Most of the Midwest got a drink of water over the weekend. Temperatures did break, which is helpful. There's parts of eastern Iowa, central Illinois, where our farm is, that still needs a drink of water, and at least for this week it's not forecasted. I think the temperatures allow the crops to just get by until the next rain, and supposedly next weekend there will be some rains for the center part of the Midwest. Right now the crop is rated 58% good to excellent. Last year it was 72%, and the crop is a good 2 weeks behind normal in growth. Right now the USDA is talking about a 166 yield, a 13.8 crop, which is adequate. There are some private estimates of a yield as low as 162 and a crop of 13.3, which probably would push prices a little bit higher from where we are now. Soybean crop, it's rated 54% good to excellent versus 69 last year, and we're kind of in the middle of a trading range that we've had. I think that It's still a lot to be determined. When I was down there in central Illinois, usually beans are thigh high with good canopy. They're about 12 inches tall with no canopy at all, and there's concern about the lack of canopy reducing the final yields all across the Midwest.
Alan mentioned that China-U.S. trade situation's taken a back seat to other news in regard to the stock indexes. What about the grains and the U.S.-China situation?
I think the China situation is one of the top 3 sensitive issues that the grain market is trading. I think last Friday there was concern that there's no movement along and the president could add tariffs to the remaining $300 billion. But over the weekend there were Chinese companies that were asking the Chinese government if they could have the ability to buy U.S. ag goods and drop the tariffs. So that offered a little support to the market, although there's no confirmation. Last week, China was an active buyer of beans out of South America. There was also rumors that they may have bought a few cargoes of U.S. new crop beans. So I think China needs to buy certain U.S. ag products, but right now the Chinese government has taken a hard line on the trade talks.
We always look at the funds. Steve, what are the funds doing in the grain markets, and what are the technicals saying?
We were surprised that they liquidated some of their long corn and wheat positions last week. They're not as long as we thought. They're short beans, meal, and oil. As far as technicals consideration, we're at the lower end of the trading range the corn's been for the last few months. We need some kind of weather problem in order to go back to the higher levels. In the beans, we're at the midpoint of the trading range. Funds are short. I think the funds are a little bit concerned about going beans lower in case there is a deal. Right now, there's too many beans in the world. The bean crop is the one that's probably going to rely the most on weather here in August. And so far, the weather's supposed to be okay. Normal rains, normal temps, but anything warmer or drier than that, and the bean prices probably will go higher. Wheat's near the lower end of the trading range. There's just too much wheat in the world, and we are through the U.S. harvest with yields better than expected. And the spring wheat crop is rated higher than normal, and they're the ones that are going to get the rains with this high pressure system down in the southwest, and so the rains go over the top of it and help the spring wheat crop.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.